Portfolio has been battered. Bitcoin has rejected the 200-day moving average, and we've wiped the gains from the last few days. September historically is a bad month for Bitcoin. We're going to go through some macro in this video to find out step by step where we think we're positioned in this cycle. We've got Bitcoin on the daily, and this is exactly where we are in the cycle. And this is the moving average that I said that we just dropped, the 200 daily moving average. So we started the year positive after a November crash in 2022. We always have the November crash. We had another one in November 22, accumulated sideways, and then at the start of the year we were on full bull. So we had a huge move to the upside at the start of the year, topped out in February, and then the pullback to this trend line, and then another move to the upside. The next move to the upside was a strong move to the upside. Then we had the standard pullback, and then we tried for the new high. Now, this is what's concerning me at the moment. We tried for a new high. We didn't manage to get a break and a close above the previous high other than this rejection candle here. So we had a move to the upside and it was straight away rejected to the downside the following day. So exactly the same's happened here. Huge move to the upside, tested the 200-day moving average, rejection, and then 2 days later we've wiped the whole gain. So we're holding support at the moment, and this is the area that I'm looking at. This is the area of 24,859. If we break and close below that area, then you're likely to see this next level being tested. This next level at the top of the range is 21,468. So this is what I'm looking for on Bitcoin. You could quite easily see something like this. You could track the trend down using your diagonal trend line, track the trend down, and what you're probably likely to see is price action deciding, hovering around the 200-day moving average, and then trying to make its mind up whether it's either going to break to the upside and retest, or whether it's going to break to the downside and we're going to lose these levels. So that's what we're monitoring. The next metric that I want to show you is the Bitcoin heat map. Why is this important? Because you can tell how historically prices reacted within certain months. And you can see September's particularly a bad month for Bitcoin. And we go over, and if we analyze this a little bit further, you can see the pre-halving dates. So you've got the pre-halving date of 2011. There was 2012 halving, and the pre-halving date of 2011 was 37.43% to the downside. The next halving was 2016. So the 2015, we actually had a positive there of 3.86%. And then the next pre-halving date was minus 15% in 2019. So you had the halving in 2020. So historically, out of all of September, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red months out of Bitcoin in September, and that includes this September. So we don't know whether that's going to close green. We don't know if it's going to close red, but if it follows the pattern of history, then it's likely that it is going to follow red. So that's the heat map. The next chart that I want to show you is the stock to flow model. This is the model by Plan B. If any of you guys haven't seen this, this is quite an interesting one. A lot of people are saying that it's broken, but what it does is it analyzes the different periods of greed, fear within the market. And you can see when we're overbought or oversold. And you can see we've always reversed back to the mean on this stock to flow model, but we're quite far away from it now. So the previous cycles have got blue here. You can see where there's low interest when it's blue, and that tends to time the bottom of the market. You can see the COVID crash in 2020, and then you had the move to the upside. What was that move to the upside? It was from around 3,000, and it went all the way up to 70,000 to the top of the bull run. So that was the previous bottom indicated by blue. You got one here as well. There's no interest, and then you get the huge move to the upside. So these swings don't look much on this chart, but they are huge. And you can see that we haven't hit blue yet. We're starting to turn a little bit, showing the interest going down. Are we in depression phase? It kind of coincides with that. So if price action pulled down a little bit more on this, and we had that drastic September that we're all potentially thinking that we're going to have, and then it deviated back up to the top of this level over the period of the next few months, the mean reversion on this is 116,000. And then it's got the halving built in here. So the next halving date's 21st of the 4th in accordance with the current block hash rate. So if the next halving date is around about then, that coincides with this move to the upside that's being built in here. This move to the upside actually goes up to 1.25 million. Now, do I think it's going to hit 1.25 million? I think it's a big ask from the previous 70,000 at the top of the previous cycle, but who knows, guys, who knows? So that's the stock to flow model. The next chart that we are going to look at is the DXY, the Dixie. So where you can see with Bitcoin, we've lost this 200-day moving average. that's completely broken and moved to the downside. So we've lost momentum on Bitcoin, where you see we've gained momentum on the DXY. We've regained this 200-day moving average on the DXY, and we've been in this range for some time. So all eyes on the DXY. If we can break through this range and do a support and resistance flip, or a resistance support flip in this instance, come back down and test this, you're likely to come back up and test this 107.49 region. What does that mean for Bitcoin? Because we know when there's strength in the dollar, there tends to be weakness in Bitcoin. When there's strength in Bitcoin, there tends to be weakness in the dollar. So this is the area, and this is the level that I'm going to be looking at for a reaction if we do get an upside to the DXY. Because what does this coincide with? Around about the end of September. So if we had a bad September and a run up on the dollar in September, and we had downside on Bitcoin and the crypto market in September, then the chances are in October, this could act as rejection, move back to the downside, strengthen Bitcoin, and then we can move forward based on that. So you guys who've been following me, you've been looking at my portfolio. I've started a brand spanking new portfolio. It's down just over 1% at the moment, and I've accumulated 3 altcoins in there. So I'll put the video at the end, and you can watch what altcoins I'm accumulating, because I'm interested again now, guys. It's all about bringing your average down, not having all your eggs in one basket and accumulating at lower levels. So it's like DCA on steroids. So go back and watch that video at the end of this. So next. Okay, the next metric's the fear and greed index. You've all seen this, guys. Why is it important? Because you know that buying into fear is always better than buying into greed. So we're currently sitting at 39 on the fear and greed index, and this is the historic chart here. So you can see this is what Bitcoin's been like. It's oscillating since its inception between fear and greed, and that's normal with any market and normal with any sentiment. So like I say, we're currently sitting at 39. We haven't hit extreme fear yet, so we need to hit extreme fear at some point in the market before we could start making moves to the upside, getting a bit of confidence and getting people, the retail, greedy again. So hope you enjoyed this episode, guys. I'll see you in the next one. Take care, and don't forget to watch the next video.